All right. Hey, everyone. Let me just move this over. All right. Cool. Mark here. Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. I got a few announcements today. Oh, by the way, I am streaming on TradingView. Let me just pull that up here real quick so I can see what's going on over there. Just give me a second. All right. And cool. So for those that are new to the stream, welcome. Let me explain to you how this works, and then we can get started. So what I usually do first is I run through the economic calendar. We're going to talk about that very quickly. Then I get into the analysis portion of the stream, and then I usually have time for some questions. So if you have a stock or an altcoin you'd like me to analyze very quickly, you can put the symbol in the chat now, and make sure it's USD or USDT. If it's an altcoin, make sure you put that so that I know to look at the correct symbol. Also, if you want to share what city or what country you're from, that's always a fun fact. Okay. I'm streaming from the greater New York City area, also known as Northern New Jersey. And no, it's not one of the cool places to be. All right. Anyway, so let's get this thing started. All right. And then we'll get going here. So let me just put this slide up. All right. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now would be a good time to put these questions in the chat. I have a couple of announcements really quick that I want to make before I get into the actual stream. So first thing I want to mention, and here's Alex, right here. I'm going to put this over here. This guy's on vacation, right? Now, the reason why I'm putting this up here is because Alex has been promoted to a moderator in my community. All right. So I actually haven't made the change yet, but I asked him if he wanted to be a moderator. Now, keep in mind, he's a top student. He's been following me for a few years. The guy comes to every stream. He happens to be from Romania, and he shares great charts. He understands my methodology. He's passionate about the markets. That's the most important part. And he shares a lot of great ideas and a lot of insight. So Alex is now going to be a moderator in my community. This is great for a lot of reasons. You know, for one, it's someone who's available during European hours that can answer questions here and there. And also, this allows me to open up a free chat channel. See, right now, the free area of my server, my Discord server, there's some free channels, but the chat is turned off. And I have that particularly set that way because I don't like all the chatter that occurs on these platforms, especially when it comes to the herd mentality and people having no idea what they're talking about. You know, some people, they don't mean anything bad by it, but they put information that can really interfere or confuse other people, right? So since I have a moderator now that can actually look over that, you know, the the free chat will be available, obviously, when he's available, and you can interact and ask questions and things like that. And someone is there to answer your questions or just, you know, say hello to, whatever. So anyway, so that's a great thing. Alex, thank you for accepting this new role, and I'm excited to have this started. So obviously the guy's on vacation, and look, he's still in the chat. You European guys, man, you guys are always on vacation, but I'm joking. But look, I mean, it just shows he's still in the chat. Okay, he's on vacation. He says he's going to watch the stream after anyway, you know, when it's more convenient. On vacation. That's nice. I'd like to be able to do that. But anyway, enough with these bad jokes. So anyway, Alex, thank you for being for making yourself available and accepting this role. He is now our new moderator. All right, and he's joined the team. So again, thank you. So that's the first announcement. Now, another thing is I've been speaking to someone who is a professional marketer. All right, someone that has professional marketing experience, and this person explained to me that he was not renewing his membership with me because I give away too much stuff for free. This was his honest feedback. So I am going to be making some changes to these streams soon, where I'm going to be probably just going over certain markets. But if you want to get like the analysis, you know, there'll have to be a change there. So I'm just letting you know that's coming. The other thing is the trade scanner, right? We have some interesting things happening there. The coin scanner is great because it now gives you the take profit and the stop loss. We're now updating the stock trade scanner. So the stock trade scanner previously, that thing basically would just generate these long lists of symbols. And, it was confusing. People weren't sure what to do with this information because it gives raw trade data. Well, we were refining that. So now we're going to get the stock scanner to just pick one stock and give you the stop loss and take profit and a few other filters on that thing to really increase the chances of that stock doing what we anticipate it to do, right? That kind of thing. So that's on its way. So definitely check that out. By the way, if you want to check out my Discord server and all that, the link is in the description. If you become a member, just make sure that you have an account in Discord, like an email account in Discord, or be a free member there, because people join, but they don't have a membership on the platform, and then they can't access anything if you're not a free member on there. So just make sure you do that. And all the links are in the description. All right. Anyway, so now speaking of that, let's get into for a few things. Hey, Sean, good to see you. Let me just say hello to a few people real quick. All right. We got, Alex, of course, from Romania. Johan, good to see you. All right. Mr. Plow, how are you? Okay. Howard, good to see you all. I don't see anyone in TradingView. Is anyone watching me over there on TradingView? Now would be a good time to say hello. I know the markets are slow. This is, by the way, the peak slow season of the markets. I wrote that in my TradingView article yesterday. And I talked about a few of those things. So hopefully you read that. But it's important to understand your environment. Signals that may have worked normally, or maybe strategies that you may employ normally, you may notice that they don't work, or they have a harder time, or you may start to think that it's you. Maybe you're doing something wrong now. I get this kind of feedback a lot, and it's like, no, it's the environment. You do have to understand that the environment has an effect on everything. So strategies that may be higher probability or higher win rate can suffer in environments like this, because you need to realize what's happening in the environment. I'm going to make this chart bigger here in a moment, so please don't worry. But in a slow environment like this, what's happening, for one, is you're dealing more and more with algos. This is not going to get any easier, but you have to understand where profit comes from. This goes back to having a good grasp of how the business works. People don't really take any time or effort to understand how the business works or where profit comes from. Profit comes from ignorant and inexperienced participants. That's where it comes from, because they make mistakes. Human nature, right? That's what leads to profit. So if you're interested in gaining profit, then your goal should be to learn about these mistakes. And part of that is you yourself have to separate from human nature. Like I tell people, I can't save you from yourself. Human nature is the greatest obstacle. Getting over yourself is the greatest obstacle to making money in this game. That's the first obstacle. Okay, there are other ones, but that's the main one. Most people can never get beyond themselves. So you have to do that in order to recognize the mistakes of others. That's where profit comes from. Now, I go into this whole rant because in this environment, what's happening right now? People go away, right? I mean, look, Alex is on vacation, okay? Everyone goes away. This is the peak season for that. Retail traders are where profit comes from, because these are the people that are least experienced, right? The most ignorant, and they're the most susceptible to the herd mentality. So when they're away, who is left to play? Market makers, real market makers, algos, right? Do you think you're going to make money off of them? No. Your chances are very small. I mean, you have to be really good. Number one, you really have to understand how the game works to even attempt that. So it's the same as a poker table analogy. I bring this up all the time, even if you're not a poker player. An empty table is not a good place, or a tight table is not a good place to expect to make money. You want to go during prime time when all the tables are full and a lot of drunken tourists are there just gambling to have fun. That's where a professional poker player will make money, or that's where at least their chances are better. The markets are the same way. Right now, we don't have any drunken tourists in the markets. They're all away. Now, when they come back, right, that's when money starts flowing again, and that's where profit potential becomes more probable. Does that make sense? So with all that being said, again, understand the context of the environment. We can still take trades, but it really pays to be extremely selective in your trade, in your trade choices. And you really need to know what you're looking for. A lot of people don't even know what that is. Man, is anyone watching me on TradingView? Can you guys give me like something in the chat? I don't see one thing in there. I said I'd spend a lot of time setting that up, and I hope someone's watching me. All right. Anyway. So when it comes to selecting, right, or coming up with a strategy, if you don't know what opportunity looks like, or if you don't know what an inefficiency looks like, you're going to have a hard time setting up even rules, because your rules have to be aimed at a particular situation in the market, right? That's what the trade scanner is all about. So anyway, all right, let's get into first things first. I want to get into the economic calendar, okay? And then I'll start getting into these questions. So by the way, again, people, ask your questions. Bill's from Texas. Well, all right, Bill from Texas. There's only two types of people. I'm not going to get into that joke. It's a bad joke. Never mind. Okay, so Texas, I've been there. Nice place. Okay, so first things first, let me talk about the economic calendar, right? I'm just going to run through these real quick. There are only a couple of items worth mentioning. So we have tomorrow, right, which is the 15th. There are two items that are worth mentioning. There is retail sales for the U.S., which is not usually, in recent times, it's not usually a big mover, right? So I wouldn't worry too much. That's really more important if you're intraday, if you're involved in something like stocks or maybe the futures. There could be like a hiccup there, but it's usually not a big global mover, all right, retail sales. The second piece of information is we have the Bank of New Zealand. They're having their rate announcement. I guess that's going to be in the evening sometime, Eastern time. Again, only important if you're in Kiwi pairs or Kiwi crosses. I wouldn't otherwise worry too much about that, but I'll mention it. It's an interest rate announcement. Now, on Wednesday, the 16th, we have, I believe it's the British CPI. And we also have the FOMC meeting minutes. I believe both of those are on Wednesday, the 16th. Again, the FOMC meeting minutes, that typically comes out at 2:30 p.m. Eastern time. Not usually a big market mover, but it can have somewhat of an effect. So it is worth mentioning. Anything FOMC like that is worth mentioning. Okay. Oh, you like that? You like that? Oh, Sean. Well, Sean's making fun of my Texas accent. Well, all right, boy. I'm joking. I love Texas. I really do. But not Austin. All right. Anyway, so so that's the economic calendar pretty much. All right. Other than that, it's not a very heavy week, right? There are no FOMC meetings, right? There's no Chairman Powell testimonies and all that kind of stuff. Usually, this time of year, by the way, is when they have the Jackson Hole conference, which usually is like the fourth week of August. And Jackson Hole is when all the central bankers get together and I guess talk about nothing and party. Can you imagine partying with central bankers? I'm sure it's really nice, but it's probably boring. Anyway, they're never going to invite me to those parties. All right. So anyway, that's the economic calendar. Be aware of it. All right. You should be in the habit of checking the calendar every week and just making sure that you know what's coming ahead with these scheduled events. Also, you should be aware of quarterly reports from the stocks, especially if you're in a stock. You should know when that quarterly report is coming out. In fact, the stock version of the trade scanner is going to be able to know this information, and it's going to use it and also make it available. So, but you should know this, right? So if you're involved in a stock and the quarterly report is like in a couple of days, you need to know that because it can have a dramatic effect one way or the other. All right. Anyway, so let's move on to the next thing. All right. Oh, from the Bronx, moved to Dallas, and now has a fan. Oh, cool. Cowboy fans. All right. Anyway, all right. So let's move on to the next thing. I'm going to make my chart bigger here. And again, thank you all for taking the time to be with me. If you like my channel, you like my content, please press the like button. Please press the subscribe button. Press the boost button on TradingView. Man, there is no one watching me on TradingView. I can't believe you people are not watching me on there today. I am insulted. I'm joking. All right. Man, you can at least say hello or something. Man, do I have any views on it? Let me see what's going on over there. Okay, someone's watching me. Oh, you know what? Maybe you guys are typing stuff and I can't see it. Maybe that's what it is. It's just blank. I can't see it. So I'm refreshing it and I don't see anything. So I apologize, guys. I apologize for giving you a hard time. Oh, there they are. Oh, look, Nasir. There you go. And Suzanne. Okay, I see you guys now. Cool. All right, thanks for chiming in. All right, so let's talk about this Bitcoin situation. So obviously today's title is Bitcoin bonds gold, right? Making sense of the macro. A lot of people don't make the effort or take the time to understand this relationship. It's very important. Markets don't trade in isolation, right? So usually markets are interconnected in some way. These are called correlations, and these correlations change. But one important relationship and correlation, no matter what, is the bond market. That's where everything starts. Okay. That's where the game begins, the bond market. Why is that? Because bonds are a reflection of interest rates. Interest rates are the cost of money, borrowing money. So when it's expensive to borrow money, less people borrow it. And if less people borrow it, meaning businesses and people, there's less money in the system, right? There's less money being put to work in the system. There's less hiring of people. There's less investing in this. And you get the idea, right? When interest rates are low, people can borrow more money. So a lot of money is borrowed and it stimulates things because why? People hire more people, research and development, people invest in more inventory. You get the idea. That's why interest rates are so important, right? Now, interest rates, because of that, there's this thing called the business cycle. You can Google that, the Pring-Turner business cycle. I talk about that a lot in like previous webinars and stuff, but that is sort of a roadmap of the business cycle. And you always want to kind of know where you are in that map, especially if you're thinking investing, longer term investing. It's very important because let me just put it this way. When it comes to interest rates, do you think asset bubbles develop in high interest rates or rising rate environments? Think about that. Okay, now, so with that being said, I want to talk here about Bitcoin. I want to talk about the bond market, and I want to talk about gold. Before I talk about this Bitcoin chart, let's go to the bond market first. Now, I usually look at ZN1. That is the 10-year note futures. Now, let me ask you guys a question about this. The price of the 10-year note futures is inverse to the bond yield. It's an inverse relationship, right? So that means if prices on the bond futures are going lower, what does that tell you about the bond yield? Anyone want to chime in on that? You can't comment, DGen. Oh, that's interesting. Okay. Some people can. So maybe that must be, maybe it's a trading view thing. All right. Thanks for letting me know that. I'm like yelling at everyone over there. And meanwhile, they're trying to type stuff to me. Okay. Sorry, guys. I was not trying to be mean to you. Thanks, DGen, for letting me know. Okay. So Sean says rates go higher. Right. And I just finished saying that rising rates are generally good or bad for everything. Who wants to answer that question? Are rising rates good or are rising rates bad for economic growth? What would you guys think? And if you don't know, you can say, I don't know. I like to be interactive with these streams a little bit. I like to get you guys to think, right? You guys and you girls should be thinking. Suzanne says yield going higher. Right. Okay. No cheap money. Right, Sean. No cheap money. It's bad because cheap money is what stimulates things. In fact, the Federal Reserve uses their power to manage the money supply. One of their tools is interest rates, right? So they control the Fed funds rate, which is the interest rate to the banks, right, in the system. And when they move that rate around, it affects everything, right? That's why when people borrow money for a home, this is what you're looking at, basically, the 10-year note, basically, right? So that's very important. Now, so bonds here, right, they're pushing lows. I've been talking about the bond market for months and months and months and months, and I always bring it up. And even though we had some noise here, let me point this out real quick. Even though we've had some noise in the bond market, right? Hold on, where's my, here it is, right? We've had some noise where it was like sort of kind of bullish there temporarily, right? Remember this? Remember this, right? That was some Fed intervention. That was the Treasury Department dumping all their money into the system, right? To save the banks. Well, since then, man, this has not improved. So rates are poised to go higher. They're rising. Now, it's not a one-to-one relationship. It's important to understand that. It's not one-to-one. So just because we get like a few green candles in there and stuff like that doesn't mean that, okay, everything's going to be good now. No, it's not one-to-one. So bonds have been generally, the trend is generally bearish. If I go to a weekly chart on this bond, on this chart, look at this. These lows should not be very surprising. Okay, we are going back to test the low. We're not at the low yet, but as you can see, we're on our way. And all I see are lower highs and lows being pushed. That means rates are rising. Okay, so that is very telling because this should shape your expectations about the near future. Now, let me point out something else. You can do this too. You can do what US, right? US 10Y. Okay, US 10Y is the inverse. This is the 10-year note yield. As you can see, it's trying to go for its higher high, right? This is basically the same chart, just inverse. You see that? So rates are rising, right? Either way, you say, oh, okay, heard enough of that. Who cares, right? Well, the thing is, this shapes the future. And when it comes to investing, when people ask me, well, should I now a good time to invest in stocks? I keep saying, no. I have not touched one stock as far as investment wise the whole year. I set up a channel where I was going to share like high potential growth stocks. And I've been watching this bond market the whole time. And I'm like, man, I just don't like it. I just don't like it. I missed the whole rally, that the May rally, the market, with the AI hype and the Treasury dumping their money in and all. I missed all that because I just don't like the bond activity here, right? So now here we are with rates about to start pushing their highs. What do you think that means? So investing in stocks is a bad idea. You see, like that's how it shapes your perception of the future. That's how it should be shaping whether you're thinking about investing or even with your shorter term trades. Now, this also affects highly speculative assets like altcoins, like Bitcoin, like growth stocks, small caps. Have you seen the Russell 2000? Have you seen that? Let's just take a look at that, right? US 2000. Have you seen this? Look at this pullback on this thing. I mean, it's been generally strong this year. This was like all that AI nonsense, but man, look at this, right? Look at this. Look where it's coming from, though. Look at this. Look at this. Should we be surprised? Should we be surprised about the Russell 2000? This is the futures. Actually, this is the futures contract. It doesn't matter if you look at this. You could look at the IWM. Let's take a look at the IWM. It should be the same thing. Okay. This is the ETF. Okay. Look, same chart. Okay. Hardly even changed. Same chart. If you knew that, if you knew this going into it, you take a look at that bond chart and you're like, highly speculative stocks. By the way, the Russell 2000 is heavily weighted with regional banks, right? Who suffers with these rates going higher? The regional banks. That was the banking problem that we had a few months ago. Look at this, right? So this should have told you, stay away from small caps, stay away from Russell 2000 stocks as an investor, or tech stocks, anything high growth, right? Growth stocks. Anyway, so that's that part of the relationship, right? So we started with the bonds. Now we're talking about some of these indices, right? Let's take a look at Bitcoin now, and then we'll get to gold. But so we're going to Bitcoin. Bitcoin is a highly speculative asset. Now, Bitcoin, in the face of this situation, right, has actually been it's still pretty resilient for now, because perhaps other factors hold this thing up. But as the bonds continue, like this structure on Bitcoin, now we're just looking at structures. This structure is a bullish structure. And rates recently started to, make some progress on the rising side. For a while, rates were kind of going nowhere, right? And you had other factors that can drive Bitcoin. You have like, these legal things. You have stuff like this that comes out. I think this was the SEC thing with, let me see, how far back is this here? Yeah, June. Right. That was, I believe, that the SEC nonsense with Coinbase and all that other stuff, right? And Binance, I believe, like there's always some catalyst that'll come along that may spike these things, right? And it gets everyone all talking about it. Don't get caught up in the news. Don't get caught up in that chatter. You have to pay attention to these economic factors. So Bitcoin is not really, there's no negative response here to that bond situation, but it doesn't mean that it won't affect it. You have to understand that when the bonds are rising like that, even though this structure, right, high or low, and I even wrote about this in my article, higher high is likely, okay, structure wise, right? We have a higher low here, right? Higher low, and 32K area, higher high. That area, even in light of the rising bonds, is still possible because again, it's not that far away. And there could be some kind of news or something that can get this thing going, some kind of catalyst. It's possible. Anything is possible. But as the bonds continue to rise, it is not going to be a positive for this thing. So if bearish pressure is mounting, that again should shape your expectations. You're like, all right, maybe it gets to 32K. But here's where this helps the most. You see those bonds, right? And you're like, Bitcoin high or low, right? Bitcoin, perhaps we get the higher high. But if you're seeing YouTube titles, for example, saying things like Bitcoin going to 50K by next month, now you should know better. You're like, well, 50K, not likely in this rising rate environment. Okay. I mean, I can, let me, if I could do this real quick, let me see if I can compare the ZN1. I should be able to do this, right, to Bitcoin. I don't know. Can I do this real quick on here? I don't think so. I'm going to have to press the add button. Hold on. I think I have to do it this way, right? This way. I think I have to do it here, right? So if I put like the US 10 yield, okay, right? This is the US 10 yield compared to Bitcoin. The orange is the US 10 yield. I mean, if we go back, okay, and we basically see rates rising. I mean, just look at the situation right here, right? Rates rising. Okay, you see that? Rates rising. Do you see Bitcoin following that, or do you see Bitcoin doing the opposite of that? Do you see it? You see that? Now, we go to recent time. Rates have risen, but they're not exactly doing anything they're not making any progress, right? Bitcoin has been rising during this consolidation of rates. But if rates now continue higher, again, you can see the relationship previously, right? Unless something else can keep Bitcoin going, this is not a good sign for Bitcoin in the future, meaning forget 50K anytime soon. Rates need to turn the other way. Does that make sense? I usually don't show these comparison charts. Does that make sense, you guys? So that's the Bitcoin versus the bonds relationship. Everything begins with the bonds. Now, let's talk about gold. All right, you guys following me so far? Okay. So I'm going to get to your questions. So just be patient there. Let's jump on gold here, right? XAU USD. Now, typically, if dollar is rising or rates are rising, which is going to be good for the US dollar, gold is inverse to that, right? It's not a good thing for gold. Look at gold. So gold has been pulling back. I bring up gold because, again, this is just inverse of the dollar, or it's not going to be good in a rising rate environment. Rising rates help reduce inflation. Gold is an anti-inflationary instrument. So, of course, it limits the potential for gold. The reason why, again, I mentioned this, can anyone remember what was going on here? Can anyone remember what was going on like during this section right here? Anyone want to guess? Yeah, let me highlight that section. Anyone want to guess what was going on here? Look at the time. Look at the time of the year. Anyone want to guess what was going on in that section? Anyone? What was going on there? Let me see if anyone says it, and let's see if anyone gets it. Let me see here. Okay. Anyone? Gold to 5,000. Anyone remember? Man, you guys should remember this. Anyone remember what was going on here? Well, what was going on here was the bank failures, right? Remember the bank failures? Oh, this bank went out of business. That bank went out of business. And during those bank failures, if you watch YouTube videos, right, even the ads that pop up, now's the time to buy gold, right? Gold is going to go to 10,000 because banks are the dollar is going to become worthless. Gold, the U.S. banking system is going to, whatever. Remember all that? Remember all that? So it was all nonsense, right? And since then, what has happened? Treasury stepped in, dumped all the money in, right? There's been all these things to basically keep everything together to prevent the banks from failing, right? Now, we may be facing that again with bonds where they are, because that was the whole problem. They're long bond positions and they can't, they're too far, it's too far against them. They're trying to hold them to maturity and it's too far against them. And that's what's happening, right? And then they're not able to pay their depositors. They're not able to hold onto those deposits because these positions go too far against them. Right. And that's why that's why the US government stepped in and tried to stabilize the bond market a bit so that these banks won't have all of these banks going out of business, because then it makes people uncomfortable. And then you have bank runs and all that other crap. Right. But now we have Fed now, so I don't know, maybe that changes things. But the point is this: gold was in a situation where there was a lot of hype, a lot of talk. Gold was going to 5,000, blah, blah, blah. Meanwhile, if you paid attention to the bond market, the interest rates, let's go back to ZN1, right? If you had paid attention to this, you would have been like, bonds are trying to rally, and they were, but bonds went to that resistance, and they have failed ever since. If you were tracking that, you would know, if bonds are pulling back like this, I probably should not be aggressive with gold. Gold is probably not going to 3,000 anytime soon. And especially with this look, right? Gold, as you can see, gold is at 1,900 basically on a pretty important support. And now the bonds are pushing their lows. Where do you think gold is going to go? Should you be aggressively buying gold at 1,900 just with this perspective? Should you? Someone tell me. With Fed now, they can bankrupt in minutes instead of, I guess in theory, I don't know. I don't know about that Fed now. So do you get that? Do you get that? That's the whole point of the stream here, why I'm talking about Bitcoin, bonds, and gold, and making sense of the macro. Because this information, just this alone, looking at these three charts, can give you the at least proper perspective so that you can make more informed decisions. You're not going to make more informed decisions by watching news, by watching the experts on the news, by watching YouTube videos. This is not where you're going to get properly informed from. It's misinformation, if anything. But again, people still resort to that as their information. And that's what they're basing their ideas on. They're buying stocks because some clown told them to buy a stock because, oh, it's got this, it's got that, it's got just look at the bond market. Don't buy stocks, right? There's no reason to be buying stocks. You can probably get better prices, right? Now, there's never a bad time to invest, but you can control at least how you want to invest and go in smaller. Like, well, if we're going to have better prices soon, I might as well put limit orders below the market. Do you see how that changes your perception compared to, I better buy this now before I miss out? We're just getting started. Can you see the contrast in perception? You should be following. This is where you should be getting your information from. This is where that comes from. Whether you're a day trader, a swing trader, or an investor, this can give you a lot of insight as far as, should I hold on to this? What kind of, what does this environment look like? Is this a high probability environment for stocks to have a rally, to see an asset bubble? So that's why when people ask me about altcoins and they say, oh, how about this one? How about that one? Have you seen the bond market? Right? Altcoins are going nowhere if the bonds look like this, because where's that money going to come from, right? In a general sense. Of course, you can have one altcoin, have some nonsense news, right? And have a spike or whatever. Sure, that can happen. Has nothing to do with the bonds, but you want to look at it from a general perspective. There's no money for those things to go anywhere, right? But when money is cheap, we have things like NFTs. Remember the NFTs? I don't hear anyone talking about those anymore. I don't see videos on YouTube saying that the early investors are going to be trillionaires. I don't see those videos anymore. How come? I thought NFTs were the next best thing, right? Asset bubble. So cheap money, right? When money starts getting cheaper, that's when the wheels should be turning in your head. All right, not now. Does that make sense? You should be more conservative now, because it all begins with the bonds. So I've attempted to explain the relationship between Bitcoin, bonds, and gold. You guys clear on that? So let me know if you have any questions. There are alts. Where are the alts going? Where do they belong? This is an inside joke. In the toilet. Because again, with the alts, they're nothing more than products or instruments or vehicles to make the developers rich. They don't solve any real problems. They're just, most of them are nonsense, all these grand ideas. Let me tell you something about the alts. I'm not saying they're never going to be a good investment vehicle again. Just understand the timing. Also understand this. The next wave of alts, whenever that is, right? I saw some nonsense title that's saying, oh, the Bitcoin winter is over. And, we're going to have a rally soon. Not with the bonds looking like this. Here, let me zoom this in for you guys, okay? In case you haven't seen. We're not going to see a rally anytime soon. Nothing significant with the bonds looking like that. Nothing significant. Yeah, we get pops here and there, but we're not going to get a sustained rally. Chances are we're not going to get a sustained rally, okay? This is a probability game. Now, what I want to mention about this situation with the alts, and Alex knows this, the future of the alts, right? The big movers, the ones that are going to make you rich, those alts either don't exist yet or they're completely not on the radar. Okay. It's not going to be all the ones that you know and love. It's not going to be XRP most likely. It's not going to be Cardano most likely. It's not going to be IOTA most likely, because those are old news. People chase new ideas, right? So it's going to be the altcoins that have the best marketing and who can capture the most attention in the next round. And those coins may not even exist yet, number one, or number two, they're just completely being ignored, right? No one even heard of them. Right? Those are the coins you want to consider, and you want to know about their marketing ability. Marketing ability has nothing to do with fundamental. People think with these altcoins, oh, they have a great idea. They're going to do this. They're going to do that. And they get all wrapped up in this nonsense, right? Which is meaningless. In case in point, look at Dogecoin. Okay. Dogecoin. I'm not going to pull up the chart because we don't need to see the chart. Although the trade scanner called the trade in Dogecoin. Dogecoin is a meme coin. It has no relevance. It has no substance. It's just a coin that got popular because of good marketing and Elon Musk, right? Because he talked about it. The coin is a meme coin. That's how irrational people are. It has nothing to do with the fundamentals. So again, this is a marketing game. When it gets to the altcoins, it's a marketing game. So do your research, not on their great idea, but who puts the most money into marketing. And you probably find your winners, okay, for investing. Anyway, see, Alex, and I bring this up too, Alex put an interesting list in the chat, in the active investor chat, which I have to look through. He said, here's a whole list of coins. Which ones, what do you think of them? And these were based on what I just explained. These are like the off the scene coins. These are the unheard of coins that may be the new ones for the future. That's where you want to look. I haven't looked at the coins, but Alex seems to be on top of that. So, and now he's a moderator. So anyway, interesting. Right. Okay, cool. These streams checking in with reality. Oh, I appreciate that, Mr. Plow. Well, Mr. Plow, no one likes reality. You like reality, and some people here like reality, but most people don't. If I had streams that said, I'm going to show you how XRP is going to be the next billionaire maker, I'd probably have 5,000 viewers right now watching me, giving me, the super chats, right? Making $50 a minute on super chats if I had something like that. But I speak reality. Anyway, speaking of that, so you guys got me. Let me know if you have any questions. Let me go over here to TradingView and see what you guys are saying over here, because I've been ignoring you guys. I apologize. So let me see here what's going on here, and then Treasury dumping money. Was this anything relative? Yeah, sort of, Max. Yeah, it was sort of like that. If you Google that, they called it. They had a special name for it. Some kind of treasury facility. The word facility was in there somewhere. And they were basically what they were doing was, instead of buying bonds or whatever they normally do or something, like the bonds usually absorb that money, but that money was not being absorbed by bonds. It was some sort of loan facility or something, maybe giving access to banks so that they can cover up those holes in their balance sheets. It was something like that. It was very, I'm not an accountant. It was very accounty like that. It was very, accounting type stuff. And the bonds would normally absorb that money, but that money was not absorbed. And it created some sort of buying situation in the markets, right? And that's why May, June, July was just all long. There were no pullbacks. Now we're starting to pull back. Maybe the money's run out. On top of that, we had that AI hype rally at the same time. Okay. Hey, Milad, how are you? Tessa, I think you asked me like that a week ago, and I completely forgot. I remember like the next day, I'm like, I think Milad asked me a question, and I forgot to answer it. Okay. Anyway, hopefully I'll get to that. I'll try. All right. So I'm just looking back. Bank drama in the beginning of the year. Right. So will goodbye be for 1860? See, the thing is, there are support levels, Suzanne. There are support levels, but like we talked about here, we have to be aware of, if the bonds continue to look like this, gold is more likely to break those levels. So if you're investing in gold, it's one thing. But if you're buying gold like for swing trades, for example, it's probably a bad idea, right? Because of course you want to buy gold cheaper. So those would be some interesting support levels, right? I can name a number of support levels, but it doesn't mean they're going to hold, especially if the bonds keep putting pressure on. All right. Does that make sense? All right. So now let me do this real quick. I'm going to pull up Ethereum. Okay. And I'll explain why here in a moment. And maybe Alex on, maybe since Alex or Raman. Hey, Raman, I saw you there. It's good to see you. Someone who has access to the Trade Scanner channel, can you put Ethereum in the, can you put the trade, the full trade? Is this the one? Hold on, let me find the one with the lines on it. I think it's this one. All right. Can you put the full trade in the channel? Here's why I want to mention this. So I have this thing called Trade Scanner Lite. It's the free version of my Trade Scanner, and it's available to all free members. Okay, if you're in my Discord community, it's a channel. It's called Trade Scanner Lite, and it's pumped out a few trades, 4 trades since I've activated this thing in 2 weeks. 4 trade ideas. Okay, in Ethereum and in the Aussie dollar. I want to talk really quick about its most recent trade. Now, Trade Scanner Lite pumps out raw data. It doesn't put the full signal yet. Thanks. Okay. Alex just put the full signal. This here, this one, right? This is the Ethereum one. Okay. Is that the one? Let me see. Yeah. Ethereum. So this right here is the actual full version of the Trade Scanner. It gives you the take profit and stop loss orders, but Trade Scanner Lite does not produce the stop loss and take profit orders. It just gives you the raw entry. It gives you 1842, right? And it tells you long or short, and that's pretty much all it gives you. I realized the raw data, people just don't understand what to do with it. So that's why we refined it, and now we have the full order, right? The entry, the stop, and the take profit. So you can at least see the raw data in the Trade Scanner Lite right now. All right. So you could set push notifications to that channel. And when something pops up, it only looks at 3 markets: Ethereum, Aussie dollar, and Apple. This is going to change soon. We're going to make some updates to the Trade Scanner Lite, but right now this is what's available. All right. Anyway, I want to point this out because I want to just draw this on the chart. Okay. This right here, what you see, this is what is available to, active investor members. And again, you have to have a Discord account to get to that. This is all available in Discord. If you don't have a Discord account, you're going to have a hard time seeing this. All right. Anyway, so let's just I want to put the prices on the chart. Let's start with the entry price, right? So it called the short. Now, here's the thing. This is a daily chart, right? We're going to go to a 4-hour chart because that's where the Trade Scanner, that's one of the time frames that the Trade Scanner operates on. Now, let's take a look at 1842. Where is that? 1842 is right here. That's 1842. Okay. Now, this was called overnight. This was, I guess, at night, 11 p.m. my time, something like that. And this is where it called Ethereum short. Okay. And the stop was where? Let's see, 1850. All right. Let's put, has this thing stopped out? Let's see. Oh, 1856. That thing stopped out. Right. So is this the right thing? Yeah, short. So it called this short. Do I have the right date here? Let's see. On the 13th. Yep, that's it. Okay, so it called Ethereum short and it stopped out. Now, I want you to see that. Let me put the stop. I just want to put the stop on here. Okay, 1850. Right here. That was where the stop was. So if anything, this thing at least protected you. Now, these trade ideas, they're not all going to be winners, right? That's why I don't care that this is a stop. You need to see this. You need to see how it works. And now it's turning around again. The question that you have to ask about something like this, right? So it calls the short here, okay? You take that short and you get stopped out, right? And you lose whatever. Let's just see where the take profit was at 1831. So I want to put this on the chart, and then I want to talk about the context. Like, was this realistic to begin with? Or, was this something that was a reasonable expectation? Because I want to talk about something here in a moment. You see, 1831 is right here. Right. So this was the trade. No, that's wrong. Hold on. Here it is right here. 1831. Right about there. Okay. That was the take profit. You see that? This was the take profit. Now, even though this trade may be going that way again, you don't re-enter this. Like this is done. Like it got stopped out. You wait for the next signal, whenever that is. It's very important because this is a momentum-based system. And if you're not getting the signal you can get caught in noise, right? So you wait for the signal. My point is this. It called this short while Bitcoin was still positioned to be long. That's where you have to use some judgment. Now, if you follow this blindly, well, obviously you get stopped out, you take the loss. You have to make sure you use stops because, again, this is counter to Bitcoin. Bitcoin is the leader. So there's situations where, the trade scanner will call Bitcoin short or like Ethereum short. And I'll tell people this is a low probability trade because you're fighting the bigger picture. The trade scanner can't see the bigger picture. So that's why it's so important to be able to just put that context together. This was a low probability type trade to begin with because you're fighting Bitcoin. Bitcoin is not exactly a short. In fact, I called a long a couple of weeks ago, right? From 29,600. That trade is still in play. And now there's a higher low. So if that thing spikes, right, it's still the structure is still generally bullish, right? This thing is going against it. So you have to realize that. You have to understand where the leadership comes from. And that will help give you perspective. Now, it doesn't mean that this trade wouldn't have worked. Possibly, sometimes we get those conflicts where the trade works, right? Even though it's conflicting. You just need to understand what the conflict is so that you have a better sense of, well, do I want to take this trade? It's an aggressive trade. Maybe I should take a smaller position since it's an aggressive trade. And when you get stopped out like this, you're like, oh, okay, see, I kind of anticipated that it was going to be less likely to follow through compared to a trade that's in line. Like, so for example, if it gave us a long, like it gave us Dogecoin, I believe was a long, right? Here, look, Alex puts it in here. What is that? Oh, okay. Can you put the Doji one? I believe it was Doji. So that's another trade that it called. Let's put the Dogecoin in there, right? And we'll just make a comparison because now Bitcoin is generally a long. All right, so let's just pull that out. Let's just pull that out. I just want to show that real quick because that's if the leader is generally bullish, then you want to work with trades on the side of the leader, right? So you can make that judgment very easily. You go, oh, Bitcoin's generally a long, and the trade scanner, I'm only interested in longs. Now, maybe at some point we could make the trade scanner smarter, like we're doing with the stocks, where it's going to avoid certain situations completely, and maybe we can filter these out. It's hard to filter things out because if I filter these type of trades out, then it's going to miss a lot of good trades as well. So that's why it's important to be able to apply that context yourself. And that's something that I try very hard to teach my students. It's not easy to learn because people have to get used to it. It's really about unplugging your conventional mind and thinking in contrarian terms. Okay. And I'm going to answer your questions here in a moment. I see a lot of questions. I just want to make this point. So look, Alex, now, thank you, Alex, by the way. And thank you guys for putting this in here and Raman. This is the Dogecoin. Now, I mean, look at the date. This was just called. I'm giving you guys free trades here. All right. This was called, again, in the Discord channels. That's where you find this. This is not like some kind of special app or anything. This is, you have to be in the Discord community, and that's where these text messages come out. So let's pull that up, right? Dogecoin real quick. I want to talk about Dogecoin because, again, and this is the 4 hour. Hey, look at this. See what I mean? TradingView put that there, that little dog. You see that? Okay. Anyway, so let's just put the trade on the chart here and see what this thing looks like. So 0751. Let's find that on here. 0751 is here. Okay. This looks like a stop out too. Let's see. 0751, and then okay, and let's see, the take profit, let's see, the stop loss was 0743. Let's see, 07, yeah, this thing just stopped out. 0743 is like around here. And the take profit was 0751. No, that's the entry. Where's it? 0763. That's up here, right? So, again, look, that was the trade, right? This was the trade I did. It called the long here, and look, right to the stop. That's going to happen, whether we like it or not, okay? It's going to happen. I mean, if I could sit here and find winner, oh, look at this winner, oh, look at that winner, I'd rather show you losing trades so you can see what goes wrong, right? That's important because, again, you're getting stopped out here. It's not a bad stop to take. All of these trades are automatically set at 1.5 to 1 reward risk. So when you win, obviously you're going to win a little more than what you lose. That's very important when it comes to making money with a system like this. Okay, does that make sense? So that's the Dogecoin one. And again, that's my point, right? You have these orders in advance. You should not be stuck in something like this and, oh, it's still going against me. You should be out. It went to the stop. And again, all these trades, by the way, are being tracked. And soon I'm going to be able to show the spreadsheet. I know that there's like a Google sheet somewhere with all these trades being tracked on it, and then the bot calculates the P&L. But I'm going to make that a little easier. We're going to work on it so it's easier on the eye, and I can just share a link and be like, hey, everyone, here are the results. So you can see closed trades, okay? So, and that's why I don't trade this month. Right. So now a trade like this, could we have been able to avoid this loss? No. You take the signal, it stops out. That is going to happen, and you have to be prepared for that, okay? You have to understand that that's part of the game. Okay, no problem. But when you win, you should be winning 1.5 to 1. So if your size is the same and all that other stuff, you should be getting ahead. Now that Ethereum trade that I showed you, right? That was a trade that you could have made some judgment on, and I'm speaking fairly here. You could have made some judgment because you're taking a short in the face of Bitcoin being a long, right? And that's something that you don't want to do. So it automatically, it's lower probability. So that justifies, oh, maybe I should go a little smaller. Maybe I should take half the position because it's not exactly in my favor. Does that make sense? Okay. Yeah, of course, too, when you're working with smaller time frames, things are going to be noisier. All right, so I just wanted to cover those real quick. Again, if you guys are interested, I think it was a AUD/USD. The trade scanner called this one, the free trade scanner Lite. It called this one a short at like 65 something. Maybe Alex, you can go to the Trade Scanner Lite channel and just pull that one out real quick. This was a free trade that was available to everyone. It was a few days ago. 65 something. What was that price? Can you just throw that price in the channel? Now that was a raw price. It never gave you a stop loss or a take profit. The Trade Scanner Lite won't do that. It'll just give you the raw price right now. But I know this trade was like a nice short on this thing, on the Aussie dollar. Okay, so for those that may be interested in Forex pairs. Anyway, all right, you guys. So let me start jumping into your questions here. There it is, Aussie dollar 65.64. Right, there's the date. Look, this was in the Trade Scanner Lite channel, free. So you could have seen this if you could go there and see it now. All right, on 8/10. So here's 8/10. It called it a short. Let's see, 8/10. This is all 8/10 right here, right? So 65.64. That's all the way up here. That's 65.64 on this date, okay, on the 10th. You see that? This is where it called it short. So not all the trades are red, okay? And this one, basically, this thing typically follows the S&P, and we know with the bond market and all that stuff and the dollar rising, that's probably a decent probability that this thing's going to be a short. Now, of course, it never gave the stop loss and take profit. You'd have to figure that one out on your own, but we're going to get to that soon where it starts doing that. All right. Anyway, just wanted to point that out. So they don't all lose. All right. Anyway. Okay. So let's move on to the questions here. All right. And again, I appreciate you guys sticking it out and checking this out. There's a lot of valuable information. I see people dropping off, but obviously those are people that are they're not interested in what works in this game. These stop losses that I showed you, by the way, believe it or not, save you money, because you're not getting caught like in constant noise and bad trades or something that could turn into a really bad trade. This thing, you follow the orders, you get knocked out, you're done. You just wait for the next signal. That's a lot better than sitting in front of the computer and be like, where's the next one? And getting bored and then starting to make up trades. That's the worst thing you can do. Okay. So I'm going to go back here and I'm going to start answering questions. Let me start with Milad, because this guy, he asked me a question like a week ago. I completely forgot. So let me do this. He wants to see Tesla. Let's take a look at Tesla real quick. Right, so here's Tesla. Let's go back to the daily time frame. Look at this. But TradingView, I guess TradingView has a sense of humor now. We're getting cartoons of things here, right? You see that? That was Elon Musk over there. That's funny. Man, this is what they spend their resources on cartoons. Oh man. I don't know. If TradingView was a stock, I'd have to short them. I'm joking. I like them a lot, but really, someone had to program that. All right. Anyway, well, they're making billions of dollars. I guess they can afford luxuries like that. Okay. So here's the thing. Well, look, Tesla is generally a market stock, right? So let's go to the weekly stock. Let's go to the weekly time frame. This shouldn't be that surprising, right? The market has been due for a pullback. Bonds are rising. Who do you think depends on debt a lot? Is who? Tesla, right? They borrow a lot of money. So rising rates is certainly not going to be a good thing generally for this thing. See how it all ties back to bonds, right? Generally not a good thing. But so you're pulling back. Okay, no problem. You want to find your support level. Right now, that's 217.65. That's a little bit of a ways from here, right? You're at 239 right now, basically. And this thing is just showing basically you broke below the previous week's low. So momentum is still generally bearish. I would not be in a hurry to buy this thing, whether it's for a swing trade, a day trade. I wouldn't be in a hurry. Investing, you know my opinion on that. So there's no reason to buy this thing just yet. You do have this minor support, but you don't exactly have a friendly environment. When you check something like this, so maybe you get the confirmation tomorrow to buy. There's just nothing there right now. Perhaps you get it tomorrow or the next day. You get like a pin bar or an inside bar, and you want to try that for a swing trade. That would make sense. Okay, I mean that's doable, but just understand that you're in a tough environment here. Again, not a good time of year as far as follow through and trades. You may get like a little pop, kind of like you got over here, right? These little pops, getting everyone all excited, and then it just never follows through, right? So that can happen. Also, whenever you're dealing with something like Tesla, make sure you check something like the S&P. You can check the S&P or the NASDAQ. It doesn't matter which one. Tesla doesn't have to be a member. Now, look, the S&P is trying desperately to put something bullish together here. Look at this, right? This market's closed. S&P closed like that. Now, I know, the way the S&P is weighted and all that stuff and what's going on there, it is certainly biased. There's some bias. So bearish movements in the S&P are probably going to be less likely to come by or to get like significant bearish movements. But interestingly enough, you have a bullish pin bar from Friday and look, took out that high today. There's a buy signal and this is a failed low. You have a compound failed low basically, right? Or double bottom. See that? So that's all. Those are bullish signs. That's a positive for Tesla. But just keep in mind, Tesla, there's no signal. So just because you're getting the bullish sign here doesn't mean that Tesla is going to follow. There may be other factors, but this certainly helps. If this turns red during the week, let's say retail sales doesn't come out favorable, something dumb like that, whatever, and this thing turns red, then Tesla's in a position to go lower. Again, there's no buy signal there yet. So does that make sense? Okay, let me move along. Thank you for asking a lot, and thanks for stopping by once again. My only fan from New York City. Okay, Alex wanted Shop. Let me jump over to Shop. Okay, so Shopify. So again, look at these stocks. They're all kind of all these big names, all these popular. Oh, I'm going to buy Shopify, right? Like all these, you know what I'm talking about. The mainstream. Let's go to the weekly chart. I don't, as you can see, I'm very contrarian, and I don't relate to the mainstream at all. And so you have to be careful with these big name stocks, right? So look where you're coming from here, right? You have this price action going back this area right here. I'm going to highlight it with a square. Check this out. You have this here. See this? That's a resistance. That whole area is a resistance based on this price action, based on this little activity over here. And you're getting the resistance. It's acting. It's asserting itself. So I wouldn't be in a hurry like to get long. Although you may have a location like this is obviously better. You're better off buying it here compared to the resistance, right? You're better off buying it now or looking to buy it now. But I would just be very careful, again, with the bonds in mind. Watch that NASDAQ, watch that S&P, because we may be in more of pullback mode. Keep in mind, the next couple of months are historically bearish. It doesn't mean that they always are bearish, but this could be like the first leg of it. Like you may get a little attempt at a move higher, followed by a lower high, and then a more significant leg lower. Keep that in mind, okay? It doesn't mean that you should not take a long. The long may work out as far as a swing trade goes. I mean, if I was looking at day trades, I would be looking on the long side for day trades in that situation. So just keep in mind the limitations, okay? That's really the key thing, the expectations. You know, people will buy a stock like this and they'll go, oh, it's Shopify. It'll go back to its highs or whatever. Meanwhile, you're getting caught in a broader corrective move. All right. Let me move along. Good question. Okay. All right. So let me just see here. So Bill from Texas had a question. Bill, let me see if I can get to your question. Everyone on vacation, low volume, haven't been watching, but still want to understand. Okay. Yeah, Sean. Okay. Well, so I kind of we touched on some of the other bigger ones. I mean, let's take a look at the NASDAQ real quick. Right. You guys should always be aware. I mean, look at these things. So there's certainly a buying attempt. And for day trades and possible swing trades, this is certainly not a bad sign if you're going into this with a very short-term oriented strategy. But just keep in mind, you have a minor resistance right here. What is that? 15,370. You have a minor resistance coming up, and you have a lot of potential for the week where this thing can just turn around and start pushing lows again. Because again, we're in an environment that's not exactly friendly. The bond situation is not one-to-one, like I keep saying, but it still kind of adds weight, right? It just continues to add itself, and it starts to get heavy, and eventually will affect this thing. So keep in mind, this thing is also coming off of a double top. The general trend on this thing is clearly bullish, but you just have to be careful because it's like, when is this thing going to resume that bullishness? It tried over here and it kind of gave it back, right? Is it going to give it back again? You have to see. But something like this is good for maybe certain stocks giving buy signals, right? And you want to give that a try. That may be good for the next day or so as far as swing trades go. Does that make sense? And this is what the stock scanner will shine nicely here in this area as well, if it's giving like a buy signal in a particular stock. Okay, Bill. So any idea why total charts, all right, let's see what you're talking about here. Okay, so let's go to that. So the total are basically like all the markets, whatever, right? So you're saying it went up big, right? All right. So that's interesting. I have no idea why. I don't pay attention to any news or anything. Maybe it has something to do with, obviously it's a capitalization, right? So money must have pumped in somewhere. Okay. I don't know where. Clearly it's not in Bitcoin. It wasn't in Ethereum. So money must have come in from somewhere. That's all I can imagine here. This is certainly a bullish sign. In fact, that's what I was expecting out of Bitcoin, right? This type of price action. So I don't know. All I know is this is bullish. Bitcoin should be following it. Why isn't Bitcoin following it? That I don't know. I don't look to answer those questions for myself. If I see something like this, I say, okay, something pushed that, something is behind it. I'm looking at the price structure. I'm looking at, okay, we're kind of at a resistance. Can this thing continue, right? Can that thing continue? Theoretically, it should. It should go to test the highs, theoretically. But is all that money going to come in, over the next few weeks or whatever? I don't know. Environment-wise, that seems less likely. So anything is possible, but this could just be noise. This could be just some hype. Some money came into some coin somewhere. It reflects here, and then it's really nothing more than, it just doesn't really go anywhere from there. I mean, look at this consolidation, right? We've had going all the way back to June. I mean, at one point, look, this thing was like going to start pushing highs. I would imagine this got some people very excited, and all only to just give it back, right, and really go nowhere. So don't get too married to something like this. Don't make a big deal out of it. This thing, if this thing is going to start making progress, it needs to start breaking resistances, and it would be nice if Bitcoin was also reflecting it. Okay, next. Good question, by the way, Bill from Texas. Okay, why are rates rising? Max asks. Well, I don't know why rates are rising. Rates are in a free market. So obviously, look, markets trade in the future, right? So if rates are rising, that means participants. And who trades bonds? Sovereign entities, hedge funds, people in the know, right? Governments. Who trades bonds? So if they see something in the future, or they believe that rates will be higher in the future, it's being reflected in the bond. So for whatever reason, they're going higher, right? Rates are rising. So I don't try to figure out why. I just accept that they are. And if they are, then I understand what that means for everything else. Okay. Maybe they're anticipating some kind of thing. Maybe they know something. I don't know. But the thing is not to try to figure out why. It's just to accept that it is and what that means for everything else. Okay. Okay. Let me see what else we got here. Okay, got all that. Cool. All right, people. So let me just catch up on let me just catch up here on YouTube. All right. So Bill saying his dad from the Bronx. I know the Bronx. All right. DJN, good to see. Erhan from Turkey. All right, cool. I'm just catching up. I know it was a while ago. All right. Okay. All right, those are my questions. We talked about gold. All right, I'm just catching up here. I can't see the dates. That's when, right. Okay. Right. So you guys were on that. Okay. Right. Okay. No problem. Alaya, thank you. Fed now. I'm just catching up. All right. Saw on my Google feed, XRP set for the biggest bull run history. See what I mean? In 5 years. See what I mean? People, I mean, Alex knows better, right? He's going to be a moderator now. But people, please don't get suckered by that nonsense. That stuff is all over the place. Okay. Of course, you're seeing the grifters. Yeah, sure. That's by the way, that's how this business works. Okay. People just look to fleece everyone else, especially newcomers. That's why, and my whole purpose is to try to protect or help you become aware so that you can protect yourself. I can't protect you. I can't help you overcome yourself. I can't protect you from yourself. But if I can open your eyes to certain things, then you're much more informed. That's what I'm trying to deliver here. I want you to know where the valuable information is so that you could make actual judgments yourself, right? Just like this whole bond relationship that I just talked about. If you knew that, you'd be able to really make much better decisions just based on that. That's much more valuable than watching hours and hours and hours of mainstream news, which is complete nonsense. Okay. Okay. Hey, Kai, good to see you. All right. Okay. Cool. It's not always the fundamentals. There are several good projects that do not perform just because of the environment. Right. Okay, that was a conversation from before. All right, let me see. So what you're saying is the USD is an altcoin. Well, no, the USD is not an altcoin, although sometimes the dollar index can act like that occasionally. But no, but it is widely known that the Federal Reserve and the Treasury can step in and they can do things. Right? They're trying to manage the money supply. They're trying to manage the economy. There's some political pressure and they control the dollar. I mean, what do you think Fed now is all about, right? It's about control. So just keep that in mind. Okay. All right. My point was more that I don't have time to knowledge on every project. So I prefer just to let price and market structure. Right. Okay. Right. That's true. Well, that's the whole thing. Price can give you everything you need to know. All these people get wrapped up in fundamentals. You really don't need to know them unless they just make you happy to know. Some people like to read about, rocks. And it makes them happy. They're interested in rocks, right? It's the same thing. I mean, people, that's the fundamentals. You need to know them. Price tells you everything you need to know. If you think fundamentals drive prices, basically what you're assuming is that investors invest rationally, and we know that that's not true. Okay, trade, invest, whatever, it's irrational. So they'll just put their money in for stupid reasons. Why do you think we have Dogecoin to begin with? Right? That's what you need to understand. Markets are behavioral. They're not, and behavioral meaning irrational. They're not logical, right? They don't operate on logic. From on the surface. If the market likes it, I like it. If not, okay, he gets it. Too much emotionally tied. I used to like algo. The market doesn't like it, so it got dropped. Okay, right. It's really, well, see, Bill, what you're describing there is a passive mindset, right? If the market likes it, cool. Right? And that's required if you want to make informed decisions. You have to have the passive mindset. Oh, okay, Raman, cool. All right, the few strong alts have been watching. Okay. All right, interesting. Thanks, Bill, for sharing that. Okay, Bill, you're very active. I've never seen you before, but you're very active on day one here. Okay. Dodgy was a winner. I don't know. Not the one I looked at. Okay. Okay. That's why I don't trade this month. Okay. I'm just catching. I'm a little behind, man. I'm just catching up. All right. Let's see. Bearish. Okay. Got that. Yeah. Aussie was pretty good. Raman, were you in that? Okay. 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 I looked at shop. You're only a contrarian because there are so many. Okay. Well, look, I learned a few things, right? I've been in this game a long time. And, there's a couple of very important lessons that I've learned. I think I've caught up on the chat here. From Dubai. Ah, welcome, Marvin, from Dubai. Cool. Rocks. All right. Rocks can be if you're into that. All right. So just a couple of things, right? Because I pretty much caught up on everyone's chat here. A couple of very important things I learned is, number one, your biggest obstacle is going to be human nature or yourself. If you can't get over that, you're going to fail. You have no chance in this game. Your purpose, if you're here just to make money, you just want to make quick money, which most people, that's what they come here for in the beginning. We all come to this game with the wrong ideas in the beginning. And then it's about correcting that. If you're here, I need to make a lot of money. I'm going to be driving whatever tomorrow. I'm going to be a millionaire by next month. If that's you, you have failed and you will continue to fail. You have to have purpose besides that. Like maybe you're into strategy. Maybe you like the challenge of this. Maybe you're into data science, whatever. Like you can't be focused just on the money, because let me tell you, there are much better ways to make money than this game. There's a lot of frauds out there who basically push this lifestyle that, oh, I'm a trader and I drive this, and they're fake. They don't really make money. Okay. So there are much better ways. You're better off doing like fulfillment by Amazon. Your chances of making money sooner are probably better than this game. There's a lot you have to get over, right? First yourself, then the industry. You have to understand how the industry works. There's nothing that they can put your way that's there to help you. Nothing. Understand that. There's nothing. There's no tools. There's no news. There's no this. There's no that. I have the fastest platform. I have the fastest. Nothing is put for you, for them, for your benefit. Everything is for their benefit because they make money on fees. You need to understand that at a very deep level. The industry is not here to help you. And number three, markets are random. You must accept that. At a very deep level, markets are random. No one knows where a market will be in the future. There's no way to know, because a piece of information could come out that's unexpected and change everything, right? So you need to understand that. If you can overcome those three obstacles, then you're on your way. It's not something you can do overnight. Okay. Okay, cool. All right, you guys. So I'm going to leave you guys with that. If you have any questions, you know where to find me. Check the links in the description. If you want to join anything, if you're interested in the Trade Scanner, again, make sure you have a Discord account. Otherwise, you can't access the scanner and all that kind of stuff. If you have any questions, you could send me an email or you could send me a private message. The best way to reach me is a private message in the community. All right. So again, guys, thank you for joining me. I really appreciate all your help or your attention. If you can press the like button, subscribe button, that's always helpful as well. Okay. So enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.